We're now in the early stages of a sustainability revolution.
Private capital has to fill most of the gap.
It is now more expensive not to do something than it is to do the something.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance, the Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. India's COVID crisis threatens to spiral out of control as the country confirms 1 million new cases in the last 3 days. The international community pledges aid. Ursula von der Leyen tells the New York Times that American tourists will be able to visit the EU this summer as long as they're fully vaccinated. And Boris Johnson is under attack from his former aide Dominic Cummings as accusations of sleaze and mismanagement of the pandemic mount. Well, happy Monday, everyone. Good morning. A lot of stories that we need to cover. Of course, this at the top of our mind. American tourists who have been fully vaccinated against COVID-19 will be allowed to visit the EU over the summer. Now, this is according to the president of the European Commission, Ursula von der Leyen, in an interview with the New York Times. The fast pace of vaccinations in the U.S. and advanced talks about vaccine certificates have allowed the European Commission to recommend the switch in policy. Now, until now, non-essential travel to the EU has been banned with the exception of visitors from a short list of countries with low cases. Now, let's get more on this with our Bloomberg Intelligence's Sam Fazeli. Sam, thank you so much for joining us today. Now, this is a huge deal. It would open up the European industry. How does this work? Any ideas of how this vaccine works and actually how, what it means also for travel within Europe?
Yeah, good morning, Francine. So from the equation that has to be solved here, of course, I like equations, is that that's only one side of the argument. The UK, the European Union, UK, whoever, may be happy to open their borders to fully vaccinated people coming from the US, but then, of course, the US has to be happy for its citizens to travel to Europe if it's worried about any variants or whatever in terms of when they return, what kind of limits will they have on their activities. And I suspect whenever this system is put in place, it will obviously make a big difference to travel within the EU and also to the UK and back. So this, whatever way they do this, which has to be I'm sure is very complicated to make sure it's not easily accessible to fraud, it will be helpful for people to get about.
So, Sam, at the same time, we're seeing, India is really on the border of a catastrophe. It's 1.4 billion people in India. And I think we saw, so many COVID infections and the fact that also hospitals there can't deal with it. What exactly is going on in India? We almost thought they had reached herd immunity in 2020. Is it a new variant, or is it just that they haven't been in lockdown?
Yeah, no, so I'm afraid I never ever believed the comments about herd immunity previously about India. And I think anyone who tries to make those kind of assessments without actually getting some data is asking for trouble. And whether it's the variant that's doing it or not, it's impossible to know. You need much better surveillance to be able to assess that. I suspect it's a combination of the demographics of India and the living situation in terms of the density of the population and the fact that they hadn't had a proper hard lockdown, if that's even possible in some cities in India.
But Sam, so in Europe and the US, things are getting better. People are getting vaccinated. There's this pretty horrendous and really awful to watch all the sick in India. If you look at a world, how the world leads with COVID, can you actually bifurcate the two, or does the situation in India, could it be a warning sign for the rest of the world?
Yeah, Francine, putting the fire of the COVID-19 out in one house and every other neighborhood house is burning isn't really helpful. So I think the simple answer has to be that one way or another, we have to make sure that other countries where this kind of thing happens, from just a humanitarian, ethical perspective, forget about the risk to ourselves, etc., that they have access to the vaccines that they need. What is surprising, of course, is that India is one of the biggest manufacturers of vaccines already. So there has to be some policy failure here as well, potentially in India, which of course doesn't make it any better. It's still a catastrophe. But some of it has to do with that, and I think the world, whatever they can do to increase the number of doses available and help with the logistics is what we should be doing.
Sam, thank you so much. Bloomberg Intelligence there, Sam Fazeli. Now, Tesla reports tonight the car maker will have to convince investors it can hold on to its lead in the increasingly crowded electric vehicle market. Up next, we discuss this busy week of earnings with Steen Jacobsen. And of course, we'll get his take on the reports that the EU will be opening up to the U.S. travelers this summer. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. In the UK, Prime Minister Boris Johnson is under fire again. The Daily Mail is reporting that last year he said he would rather see bodies pile high in their thousands than order a third lockdown. Johnson's office strongly denies he made the comment. It comes as the Prime Minister is also facing a scandal over lobbying and cronyism. A quarantine-free air travel bubble between Hong Kong and Singapore is opening on the 26th of May. The government's announced the move, confirming a long-awaited reopening of travel between the two financial hubs. To qualify for the flights, travellers from Hong Kong must have had 2 vaccine doses at least 14 days before. And a first for the Oscars. Chloe Zhao has won the Academy Award for Best Director. She's only the second woman to win the prize and the first woman of Asian heritage. Her film, Nomadland, also won for Best Picture and Best Actress for star Frances McDormand. It's a major win for the film studio Disney. Now, for more about the film industry and the streaming wars, head to bloomberg.com/screen time. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. I need to see Nomadland. I've been holding off just because I thought it was a little bit sad and wanted something a bit more cheery. But I think now, after all the awards, it's definitely top of my list. Now, buckle up for a busy week dotted with earnings. Tonight in the U.S., Tesla reports first quarter earnings. The car maker will have to convince investors it could hold on to its lead in the increasingly crowded EV market. Tomorrow, we get figures from banks HSBC and UBS, as well as Google parent Alphabet, Apple, Shell, Amazon, and Exxon also reporting later this week. So let's get straight to Steen Jacobsen of Saxo Bank, who's joining us this morning. Steen, I have a lot of questions about COVID and, of course, lockdowns and travel. But first, if you look at the earnings, do they seem fairly priced, or are we priced to perfection when it comes to equities in general?
Absolutely priced to perfection, but the earnings has been good. But I'm really looking forward to this week in terms of the earnings, because now we move into the momentum stocks, the same momentum stocks that's carried the stock market since the great financial crisis. So this week is very, very interesting. And I think as an analyst, you're, of course, looking for not only earnings speed, but input prices in terms of inflation and the ability to maintain margins. And I think that's the two things that we'll be looking at.
So, Steen, are there specific industries that you think have been, let's say, overpriced? Or if we're not talking about a bubble, do you worry that there'll be some profit taking in the weeks to come? And what does it mean for how you want to be positioned in the markets?
Obviously, the SPACs, the momentum stocks themselves needs to confirm that this, cash-free, discounted at zero interest rate will continue into an environment where we see reflationary pressures and where we see that the opening up of the economy tends to take the cycle into a different, more mature momentum overall, and that mature cyclical move is very interesting to monitor, and we've certainly seen it in terms of the transportation, we've seen it in terms of the travel, and it's going to be interesting. But for me, Francine, this week is the big week with the momentum stocks and all of the FANGs on the front in terms of earnings.
Yeah, and so, you're expecting, the way we communicate, the way we work with Zoom calls and things like that to continue. So if you look at that industry, the FANGs, do they just go up from here, or is there a risk that they'll be broken up?
No, I think we broken up is a big story, but I think there is headwinds. Headwind is that you have a higher marginal cost of capital. I do think that this week also will be a benchmark in terms of restarting the engine in terms of higher yield, and that yield carries into the momentum stuff as a negative. We've certainly seen that the SPACs has peaked relatively to the overall S&P move, and overall, technically, the momentum of all stock indices in the major market looks tired and indicating, in my opinion, that Q2 is going to be peak growth, peak earnings, and from here onwards, we will be in a more mature cycle. And statistically, 75% of the time with this kind of pricing we have a negative both 1 month and 12 months outlook on equity.
Stina, I don't know how you look at the COVID crisis right now. So there was a lot of hope, and of course, a lot of people are talking about the fact that Ursula von der Leyen thinks that American tourists could now actually come back to Europe after essentially a year where it was only essential travel. But at the same time, you look at the horrific situation in India, and I'm unclear how this actually plays out on a world level.
It clearly has some impact on energy. We've seen that crude oil has been a little bit sideways to down. Of course, we are expecting the OPEC Plus to come up with their solution pretty soon. But overall, I think India is primarily a humanitarian crisis and a major policy failure on sort of in terms of addressing it. I hope it will remain to be dealt with very, very soon. Overall, the stock market in India, both the stock trading domestically and externally, is doing quite well, relatively speaking. But it is a humanitarian crisis, and the spillover, as you say, into Europe could be that, yes, we are opening up, thanks God for the Americans coming over and the rest of the world hopefully pretty soon. But we still have pockets in the world where the COVID-19 is not under control. And as long as we have that, we also have some uncertainty, and certainly an uncertainty that will play into the policy response of central banks, which will be pointing, as you did, Francine, very, very, very precisely to these kind of things going on in the world.
So, but do you worry, Stine, that overall, and I'm not a virologist, we're too optimistic about the reopening in general in our Western countries?
No, I think in terms of the way that we conduct policy, certainly in Europe, is that to be rather safe than sorry. So I think we have been more aggressive in putting up the barriers to control it. I think in some parts of the world it's different, but certainly in Europe we have been more defensive than it is called for, but for the margin of safety being in place, nothing wrong in that decision. But certainly we see in the sort of the policy enabling that we see on COVID-19 that we've been more controlled than we could have been.
Stine, in Europe, what could be the biggest upheaval? So let's, park COVID-19 concerns. I know you've written a lot about the latest polls with the Greens actually even surpassing probably the CDU-CSU coalition in Germany. Would that retrace and actually remap German politics and therefore Europe?
Absolutely. I think without a doubt, the 26th of September is a day that everyone needs to note down in their calendar, because if the Green is getting an election, and which is reflected in the polls as close to that, then German politics will change on the 27th of September. It's going to be more pro-Europe. It's going to be very anti-Russian. Is going to be driven by a need, in the opinion of the Green and a majority of young people in Germany, to actually drive an agenda which is investment into Germany, into infrastructure, and with it, of course, dragging along European growth as well. So this is 180 degrees away from what Merkel has done, which has been partial, which has been slow, and to some extent successful for Germany. But it's been so successful to some extent that Germany is now lagging behind in terms of its infrastructure. As we all know, they couldn't even conduct homeschooling during the close down due to the bandwidth not being good enough in Germany and the likes. And that is what's going to be addressed. But the winner here will be all of Europe in terms of the ability to navigate higher fiscal deficits.
Thank you so much, Stine Jacobsen there, Saxo Bank Chief Investment Officer, going through some of the earnings and the markets with us. Now, coming up, as Ursula von der Leyen tells the New York Times that Europe will be open to vaccinated tourists this summer, we'll speak with the IFO President, Clemens Fuest, about the impact on business and the economy. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, fully vaccinated U.S. tourists may be able to visit the European Union this summer. Ursula von der Leyen told the New York Times that talks over the use of vaccine certificates have reached an advanced stage. But the Commission president said member states will only let in all those who have received shots approved by the European Medicine Agency. Well, joining us now is Clement Fust. He's the IFO Institute president to discuss this morning's IFO outlook and, of course, the impact of the reopening of tourist and business travel might have on Germany. So thank you so much, Mr. Fust, for joining us. I have many questions on politics and how the economy could change. But first of all, if we see really a reopening of Europe as a whole to U.S. tourists, how much will that help with the economy?
Well, U.S. tourists alone will probably not enough. It's a positive sign, no doubt about that. Getting travel restarted generally is a key issue, but I suppose the recovery in Europe really depends on progress with the vaccinations. And here progress is coming along, but it's still slow.
What is your number one base case scenario at the moment? So vaccinations, seem to be okay. We don't know whether we get a vaccination passport and everything like that. What does it mean for actually what the German economy looks like in 2 to 3 quarters from now?
So for the German economy, we expect the vaccinations to be more or less complete in the summer, in July. And that would mean we would get a strong third and fourth quarter this year. So an upturn in the second half of the year.
We get first quarter GDP data on Friday. How bad could that look?
Well, the expectation is that GDP will shrink slightly because of the second and third infection waves in Germany. At the same time, we have a divided economy. So manufacturing is going very well. What's not going well, obviously, is tourism, travel, retail, all the sectors affected by the pandemic.
Mr. Fust, when you look at another big topic, of course, is supply chain constraints. How much is that a hindrance for the German economy?
So we see in our survey today that companies are really concerned about that. 45% of all manufacturing companies report problems with, in particular, semiconductors, but also deliveries of other intermediate products. This is the highest value we have measured in the last 3 decades. So there is a problem coming here. This is holding back, clearly holding back the recovery. There's a lot of demand for industrial products, but we have these supply shortages.
Mr. Fust, I mean, we have a lot of polls, and there was one over also the weekend really putting the Greens in Germany at the forefront of a possible election win. We don't know whether it'd be an outright, of course, win, whether they'd have to be in coalition with others. But again, what does that mean for, first of all, business confidence in the country and how the economy develops over time?
Yes, there is a general disappointment with the party that are currently in government, and that does help the Greens. There's also a lot of popularity of climate policies and awareness that climate change is one of the key issues in the future. At the same time, the Greens are favoring tax increases for companies. They are favoring, their platform includes a net wealth tax, which would be very bad for business. And there are a lot of tightened regulations they want to see. So businesses are very skeptical regarding this program, of course, that will develop over time and all will depend on the coalition partners. But from the business perspective, there are concerns about the Greens.
So does it mean, Mr. Fust, from an IFO perspective, that if we have more of these polls showing the Greens ahead, that actually businesses will feel very uncertain about the future? Or how do you see that playing out?
I think a lot depends on how the Greens position themselves in the debate. Currently, we are discussing the candidates, but this will shift to the program. And then a lot will depend on how the other parties develop in the polls, because that will determine the coalition that will govern, probably with the Greens. If it is a coalition with the Conservative or the Liberal Party, these tax rises and the net wealth tax will not come, and that would be good for businesses. If it was a left coalition of the far left party, the Social Democrats and the Greens, businesses would be concerned.
So are you expecting much more of, I don't know how volatile polls actually are in Germany, but are you expecting the next 4 to 5, 6 months until we have the election to be a little bit uncertain in terms of polling and in terms of market and, of course, business sentiment?
Yes, I think so. So there is a lot of uncertainty about the outcome of the election. We've just seen a massive shift in the polls towards the Greens, but the question is how stable is this and how will the other parties develop? But I think the elections are completely open. And this will have an impact on businesses. At the same time, Germany is a federal country, and the federal government often needs the majority in the second chamber to change things, which gives a certain stability to legislation. So the policy shifts will be maybe less radical than the party platform suggests, and that gives some certainty to businesses.
Mr. Fuß, thank you so much. Clemens Fuß there, IFO Institute president. Now, coming up, a throwback to the 90s. Boris Johnson's former top advisor accuses the prime minister of alleged sleaze. Up next, we discuss UK politics. This is Bloomberg. India's COVID crisis threatens to spiral out of control as the country confirms 1 million new cases in the last 3 days. The international community pledges aid. Ursula von der Leyen tells the New York Times that American tourists will be able to visit the EU this summer as long as they're fully vaccinated. And Boris Johnson is under attack from his former aide, Dominic Cummings, as accusations of sleaze and mismanagement of the pandemic mount. Well, good morning, everyone. Happy Monday. It's going to be a busy earnings week. I'm Francine Lacqua in London, and welcome to Bloomberg Surveillance, the early edition on this Monday, the 26th of April. Now, more on that third story in Boris Johnson facing mounting allegations of sleaze. The Prime Minister's team is preparing for a fresh round of potentially damaging claims from his former top advisor. Dominic Cummings is expected to give evidence on Johnson's COVID handling next month. The idea of the Tory sleaze, which Tony Blair's Labour was so successfully levelling against John Major's Conservatives in the 90s, seems to be back with a vengeance. But will this have any effect on the upcoming local elections, or is this just Westminster tittle-tattle? Well, joining us now is Bloomberg Opinion's Therese Raphael, who writes extensively on the UK. Therese, this feels like a big deal because it's someone from Boris Johnson's own team that then had to leave Number 10 that's actually coming out with evidence and accusing the Prime Minister of stuff that's pretty ugly.
Yeah, I mean, it feels like Johnson is under a lot of pressure to now deny various allegations that Cummings has put forward that, for example, that he used a Tory donor to secretly pay for the refurbishment of his flat, that he resisted locking down and caused many more deaths because of that. The question really is, what if this cuts through to voters? Cummings himself is not terribly popular. He is obviously not running for office or doesn't have his own electoral base. And I think a lot of people know what they got when they voted for Boris Johnson. So, how much of this is already kind of priced in terms of, for example, being late to lock down. And much depends really on the details of what comes out after this. So it's one thing for Cummings to make very broad allegations. It's a completely different thing for him to produce recordings and text messages and things. And we haven't seen any of that yet. You have, you get the sense that there's a lot more to come from him, especially when he testifies to Parliament in May. But, that's after the next election. That's after the local elections on May 6th.
But so, Therese, at the margin, how can this actually play out? Does it mean that Boris Johnson will actually be a one-term prime minister, which is actually a fixed 5 years, or is there more angst within the Conservative Party than there is amongst voters on the story?
So I think it's always dangerous to vote against Boris Johnson. He has an uncanny ability to kind of reframe these debates and scandals. It's far from the first in his career. I think the Greensill scandal is cutting through actually in a way that maybe, at least so far, some of these coming allegations haven't yet. And that is because, we have a former Tory prime minister who, was making calls, sending text messages, lobbying on behalf of Greensill. There is a lot of potentially taxpayer money on the line here. number of conservative officials and civil servants under a conservative government have been involved, and I think if there is a sleaze kind of allegation to stick, I would suspect it's more around the sort of Greensill saga, and we have to see how that plays out.
Great. Thank you so much. Bloomberg Opinions there, Teresa Raphael. And she's, of course, has a new column out this morning. The title is Boris Johnson Engulfed by Yet Another Big Fire. And you can read it on OPIN Go on the Bloomberg terminal. Now, Greece's second largest bank is trying to clean up its balance sheet. Piraeus Bank raised 1.4 billion euros in a share sale to boost its capital buffers. The sale was at the top end of the proposed range for the stock and will start trading on May the 7th. Now, the U.S. billionaire John Paulson is also one of the key investors to build a stake in the lender. The move is part of a broader effort by Piraeus to bring its bad loan ratio below 3% and reduce government ownership in the bank. Well, joining us now is Christos Megalou. He is the Piraeus Bank Chief Executive Officer. Christos Megalou, thank you so much for joining us. How comfortable are you in this position right now? So has Piraeus, Mr. Megalou, I don't know if you can hear me. We're live on Bloomberg TV. Has Piraeus now turned a corner? And is it going to get much easier from now? I think we're having a couple of technical difficulties, which sometimes you get, especially in these Zoom calls when it's far away. So we'll get back to the Piraeus Bank shortly. Coming up, Tesla reports tonight the car maker will have to convince investors it can hold on to its lead in the increasingly crowded electric vehicle market. More on that next.
We're now in the early stages of a sustainability revolution, powered in part by machine learning and artificial intelligence and the Internet of Things and the biotech revolution, that has a revolution that has the magnitude of the Industrial Revolution with the speed of the digital revolution. And many are saying it is the biggest business and investment opportunity in all of history.
That was a teaser there of my conversation with the former Vice President Al Gore, who will be speaking at this week's Bloomberg Green Summit. Now, you can listen to the full interview at the event, which you can register for at events.bloomberglive.com. You can also just email me for the link. Now, with Europe expected to lead the world in electric car sales for a second straight year, 9 member states have urged the bloc to speed up the shift. Cutting transport emissions is a major climate challenge for Europe and a must in order to achieve climate neutrality by 2050. Our reporter Maria Tadeo took a closer look at the bloc's plans.
We need to substantially cut our emissions, and the most effective way of doing that is obviously to phase out combustion engine cars.
Europe wants to be carbon neutral by 2050. The European Commission has made its Green Deal the cornerstone of its policy agenda. It aims to cut emissions 55% by 2030 compared to 1990 levels. Transport is Europe's biggest source of carbon emissions, contributing more than 25% to the EU's total greenhouse gas emissions. Cars represent 44% of these.
Take into account the lifetime of cars, then you just need to stop adding new fossil-fueled cars around 2030 if you want to be carbon neutral in 2050.
For now, the EU has taken a country-specific approach. Norway is ahead. It plans to sell only electric vehicles by 2025. 10 countries aim to stop selling diesel and petrol cars from 2030. Others have a target of 2040. As for Germany, its target is 2050. The problem is, some countries from Central and Eastern Europe could oppose a phase-out date as they provide a massive market for used cars from Western Europe. Despite some resistance, electric vehicles are catching up faster in Europe than other major markets. The European Commission wants 30 million new electric cars on the road by 2030. That compares to only 1.8 million electric and hybrid vehicles registered last year. The race may be on to electrify cars, but the road is still long.
Well, one company that may be key to Europe's EV targets is Tesla, and Elon Musk's cult car maker is due to report earnings later today. Danny Berger joins us now with a preview of what to expect. Danny, what are shareholders actually looking for in Tesla's results today? And good morning.
Good morning, Francine. Well, look, expectations are very high for Tesla. They've already reported their deliveries for the first quarter, and those were surprisingly strong. So investors want to see that continue. They want to see the demand for the rest of the year and what Tesla is doing with its new factories. And they really do want a jolt for Tesla. It had a 700% gain last year. But in this year, in 2021, it's had to contend with the fact that a lot of growth stocks have stalled out. So Tesla has stalled out as well, about 3.4% of a gain so far this year. At the moment, options are pricing in a pretty big jump or a fall. So the options pricing around earnings, it won't tell us the direction, but it will tell us the magnitude that investors are expecting. At the moment, the magnitude is 7.2%. Again, that's either up or down. And Tesla historically has had some pretty volatile quarters. So this could be another one. Of course, shareholders are expecting that direction is up. And already the data we've heard, as I said, those deliveries were strong, Francine.
How much will new competition actually impact quarterly figures, Danny?
Well, look, we've heard a lot of announcements, be it from VW, BMW. So more people are coming into this arena that could threaten Tesla. But it does have this brand recognition, so it might not see its sales impacted this quarter. But one of the things that could be impacted is a pretty reliable stream for revenue, and that's its regulatory credit revenue. It's when other automakers pay Tesla to meet their emissions goals. So that's in the white here. And you can see that's pretty consistent. It's good for Tesla. There's no costs associated with this. But if more vehicles are developing, or more car makers rather, are developing their own electrical vehicles, they might not need to pay Tesla as much. So this is an area where we could see a chunk taken out of their revenue, Francine.
Danny, thank you so much. Danny Berger there with the very latest on Tesla. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. The Irish Mirror is reporting that Manchester United's US owners are prepared to sell the club for £4 billion. The collapse of the Super League is prompting speculation about how long some billionaire owners will keep their presence in English football. The report was not clear if the price referred to the Glazers' majority holding or the value of the whole company. Now, Qatar Petroleum is said to be planning a $10 billion bond to fund a massive natural gas project. Sources tell Bloomberg the state producer is inviting banks to arrange its first dollar bond. The amount would make it one of the largest corporate deals this year and one of the biggest of any kind from emerging markets. And China's Ha Rong says its 2020 results will be delayed yet again, this time past the April the 30th deadline. It is another headache for already nervous investors worried about potential defaults. Auditors say they need more time to finalize an unspecified transaction before it can publish those results. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, coming up, India's coronavirus crisis continues to spiral out of control. The South Asian nation records 1 million cases in 3 days. Up next, we'll report live from Mumbai. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the situation in India continues to spiral out of control. The nation has recorded 1 million cases in the last 3 days. Hospitals are turning patients away due to shortages of oxygen. International support efforts are also underway. The U.S. is now sending raw materials for vaccines, and the U.K. and France are sending medical equipment. Well, joining us now to discuss this is Jeanette Rodriguez, our Mumbai bureau chief. Jeanette, first of all, the situation is horrific, so you always have us in our thoughts. But what exactly do we know? Is this because of a variant? How did it get so bad?
All indications are, of course, that India has a new variant on its hands. Right now, it's classified as a variant of interest, which means that there isn't enough scientific evidence to say that this is a deadlier strain, or indeed that it's more infectious. If at all we get evidence that this strain is indeed driving the surge, then it can move from a variant of interest to a variant of concern. Having said that, countries all over the world are being cautious. The UK closed its borders to India, citing the new variant. And various other countries have also cited concern about the new variant while shutting their borders.
So could India now be heading for a lockdown after the Prime Minister was quite against it?
A national lockdown seems to be off the cards for now because the Prime Minister, as you said, is dead against having a national lockdown. But state ministers have defied the Prime Minister. They are having localized lockdowns, and this includes the state of Maharashtra, which is India's most industrialized state. The national capital, Delhi, is also locked down. In fact, they extended their lockdown by another week just yesterday. So local leaders, especially those who come from a party in opposition to the Prime Minister, are saying lockdowns are best for our people right now, and they're going ahead and announcing them.
Jeanette, what is the financial impact of all of this?
So far, the markets are holding up because broader Asian stock markets are positive, and there is a hope that when India opens up its vaccination drive to all adults on May 1, it can quickly get up to speed. The risk, however, is that India is running out of vaccines. So if market sentiment sours, the stock index might enter into territory which can be read as a technical correction, and of course, economic growth takes a direct hit.
Jeanette, thank you so much. Jeanette Rodriguez there, our, of course, Bloomberg News Mumbai bureau chief. Now on to Greece, and Greece's second largest bank is trying to clean up its balance sheet. Now, we were telling you Piraeus Bank raised 1.4 billion euros in a share sale to boost its capital buffers. The sale was at the top end of the proposed range for the stock and will start trading on May the 7th. Now, the U.S. billionaire John Paulson is also one of the key investors to build a stake in the lender. The move is part of a broader effort by Piraeus to bring its bad loan ratio below 3% and reduce government ownership in the bank. Well, joining us now is Christos Megalou, Piraeus Bank Chief Executive. Christos Megalou, thank you for joining us. Do you feel like you're in a much better place now than you were 6 months ago?
Thank you. Thank you for this. Yes, we are in a much better place than 6 months ago. We've raised 1.4 billion euros. Proceeds from high quality and a diversified pool of investors. It's a vote of confidence to Piraeus Bank and its strategy, but also to the Greek capital markets and to the prospects of the Greek economy overall.
Do you see any further share capital moves for your own bank or for other Greek lenders?
We have completed our share capital take. We have announced that we will be going to the markets for an 81 issuance in the future as part of our plan to beef up our capital buffers by 3 billion. We have already completed almost most of it, and the only thing that remains is to do the 81 transaction over the short to medium term.
But you're confident to tell investors that actually you won't have any more nasty surprises in the banking system in general in Greece, also for Piraeus?
We are. There has been a long road to restructuring and recovery of Piraeus Bank over the last 4 years, intensified during the last year. We will be reducing our non-performing exposure significantly by 19 billion within the next 12 months. And this is a very big amount by European standards. We are confident that this move, together with the capital actions we have already put in place, it deals once and for all with the issue. We are looking forward to produce the returns that we will be promising to investors in a Greek economy that we expect to grow north of 4% this year, but also the next few years, with the risk still to the upside. We expect significant growth for the Greek economy to come as we move out of the pandemic.
Mr. Megalou, are you expecting more M&A? Are you expecting actually some kind of, merger to happen amongst Greek banks?
We don't expect that to happen over the short term over the medium term. It is a very concentrated market with 4 Greek banks. All of us are doing, the system is doing quite a lot of work to beef up their balance sheets, to change their operating model, to produce the returns required. So I don't see M&A coming in the horizon anytime soon.
Are you expecting cross-border consolidation amongst banks in Europe?
The cross-border thing is something that is possible. In the case of Europe, you should assume that there will be some transactions happening. I would be surprised if I see anything happening in Greece. Is a market that is quite idiosyncratic and concentrated at this stage. So I wouldn't expect anything to happen in Greece in the medium term.
What do you need from the Greek economy right now? And we heard news about Ursula von der Leyen telling, that in a New York Times interview saying that American tourists, if fully vaccinated, could come back to Europe. Is that what the Greek economy needs right now?
Well, some positive news came out of the recent upgrade of the S&P. They just upgraded Greece to the BB rating from BB minus and with a positive outlook. That's one of the best ratings that Greece had for quite some time. So that tells how rating agencies look for Greece for the future. We expect to have a modest turnout of tourism this year as opposed to 2019. But even if we have 40 to 50% of tourism as opposed to 2019, we do expect that this will have an effect, together with all the other measures that the Greek government is currently implementing for growth above 4% in 2021 and maintain that rate of growth over the next few years. The Recovery and Resilience Plan will play a big role here as well.
Thank you so much, Christos Megalou, the Piraeus Bank Chief Executive Officer. Now, quick check on the markets. Of course, it's Monday morning and we have a full week of earnings, and that will probably dominate the markets in the days to come. Right now, I'm looking at U.S. Treasury yields rising amid confidence that the Fed will remain pretty accommodative, even as robust growth takes the world's largest economy back to pre-pandemic levels. I know there's quite a lot of data points from the U.S. economy that we're watching out for this week. Investors, of course, focusing on corporate earnings. That U.S. economic data I was just mentioning, as the Fed primes them to expect no change to policy. One thing that we're watching out for is, of course, what happens in India. Emerging economies from India to Brazil grappling with COVID-19. The renewed curbs still could come on the table, and that will have a huge impact on how the economy recovers or performs. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin, Kaylee Lyons out of New York, and this is Bloomberg.
We're now in the early stages of a sustainability revolution.
Private capital has to fill most of the gap.
It is now more expensive not to do something than it is to do the something.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Well, good morning, everyone, and happy Monday from London, Berlin, and New York. Our top stories today. India on the brink. The world pledges to help fight the globe's biggest surge in coronavirus cases. Europe opens the doors. American tourists reportedly will be welcome to the EU this summer as long as they have been fully vaccinated. And high hopes. Investors are counting on big things from Tesla when the electric car maker reports earnings after the bell. Well, it's just one of the big tech companies we'll be hearing from this week. In fact, I do think we have a little bit of economic news out of the U.S. today, so look out for those data points. But Kaylee, otherwise, really dominating the markets this week is so many earnings.
Yeah, there are so many earnings, Francine. We don't have any of them yet. We don't have any of that economic data yet. And of course, we don't yet have the Fed decision. So all of the catalysts that are coming this week haven't hit yet this morning. And where that left equities across the globe essentially is mixed. In the overnight session in Asia, it was mixed. You had Chinese stocks lower by about 1%. You also had Hong Kong equities lowered, though a bit of outperformance came from Japanese stocks. And interestingly, the Sensex in India is actually positive despite the worsening virus cases there. Perhaps some hope because many countries have pledged aid to India. In foreign exchange, the yen is stronger against the dollar for a sixth day. It's now sitting at 107.71, and the Indian rupee is also stronger against the dollar. Again, maybe some hope is prevailing there. As far as the European session, once again, it is mixed. You have green and red on the screen. When it comes to the continent, looking at map markets go, all of the moves are essentially fractional. Where a little bit of outperformance is coming from, though, is travel stocks. The Stock 600 Travel and Leisure Index higher by about 0.7% after the EU Commission President Ursula von der Leyen over the weekend in a New York Times report said U.S. Citizens that are vaccinated can indeed travel to the EU this summer. In foreign exchange, the pound is one of the outperformers. It's stronger against the dollar by about 0.2%, sitting at 139.06. And on the London Metal Exchange, copper sitting at its highest since 2011. As far as U.S. futures go, it is mixed. You have Dow futures higher, S&P E-minis, though, off by around 5 points as we see Treasury yields climb higher by about 2 basis points. We're sitting at 1.57%. On the 10-year Treasury yield. The dollar is broadly weaker in the G10 space. And then I have to keep an eye on Bitcoin because a rebound is taking shape after last week's substantial losses. We are back above 50,000. In fact, trading right around 52,600. It seems a lot of people are coming in to buy that dip, Matt.
All right. Very interesting indeed to look at Bitcoin rising, although, to be honest, this little move, in relation to what you could typically see in Bitcoin, doesn't look huge to me. I'd say we're open for more volatility. That's just one man's guess here. Let's take a look at what's ahead this week. These are facts that you can count on. Tesla kicks off a busy week of tech earnings today, and it's the first day of the Bloomberg Green Summit, so definitely be watching out for that. I know we will. Tomorrow, the Bank of Japan has a rate decision, and the Fed follows on Wednesday. So all ears on Washington. Also, OPEC has a meeting, OPEC Plus, a meeting on output, and President Biden will address Congress on Wednesday as well. You'll hear more from his tax plan. Finally, on Thursday, we get U.S. GDP numbers, and Fran, U.S. GDP, is expected to really bounce back. In fact, if you follow the forecast, I'm going to show you a little bit later in the program. If you follow the forecast, we could be adding 13% to U.S. GDP over the next 3 years.
Matt, we'll have to, of course, look at oil for the foreseeable future, dipping below $62. You were mentioning that it's OPEC Plus, but it's also the story with India. Now, the U.S. has joined European countries in offering help to India as the South Asian nation fights to stem the world's biggest surge in COVID-19 cases. The country has recorded more than 1 million cases in the past 3 days, with the Delhi capital area now facing a severe oxygen shortage. Well, joining us now is our Bloomberg Mumbai bureau chief, Jeanette Rodriguez. Jeanette, how did the situation get so bad? And actually, is the only way to try and recuperate and salvage people going into a national lockdown?
The situation indeed is horrific. Just today, over the past 24 hours, India has added 350,000 new infections and almost 3,000 people have died. There was some ray of hope, some hopeful developments overnight with the UK pledging aid medical equipment, including the critically needed oxygen concentrators, and of course the US promising to send over raw materials to manufacture vaccines. President Biden, of course, very importantly, has stopped short of promising the vaccines themselves. The markets are holding up for now, but the risk is, of course, that if the situation isn't reined in very quickly, market sentiment will sour. The stock market will go to a technical correction, and a lot of investors will get burned. For now, focus is very, very clearly on saving lives across the country. Prime Minister Modi has been resisting a national lockdown, but state leaders have defied the Prime Minister and are calling for localized lockdowns, including Maharashtra, India's most industrialized state.
Jeanette, thanks very much. Jeanette Rodriguez there is Bloomberg's Mumbai bureau chief looking at the tragic situation that we're all watching in India, more than 1 million new infections in the last 3 days. Now, it's a different story in the U.S. Fully vaccinated American tourists may also be able to visit the European Union this summer. EU Commission President Ursula von der Leyen told the New York Times that talks over vaccine certificates have reached an advanced stage. She also said member states will let people who have received shots approved by the European Medicines Agency in, if, I guess, those member states assumingly agree with Brussels. Joining us now is Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli to tell us how this development has shaped up. Sam?
Hi, good morning, Matt. So, it's I was fully expecting this. I think I watched an interview with President Macron a week or so ago where he alluded to this, that all the nations are working together to come up with some kind of way of trying to facilitate travel for those who are fully vaccinated. It'll be really interesting to see how this actually pans out, because you need foolproof systems that can't be criminalized too easily, whatever the right phrase is, copied too easily. And then, there are then questions about whether each country with variants occurring in them, whether there will be then still some kind of limits or requirements for before and after travel. So time will tell, but I'm looking forward to seeing the result of this.
I'm looking forward to it too as well, Sam. I'm just waiting for someone in the Irish government to say whether or not they would sign on to this and if I can travel there in July. Sam Fazeli of Bloomberg Intelligence, thank you so much. I do want to take a quick check on some stocks moving in pre-market trading now, all tied to the virus and vaccine story. On the vaccine front, CureVac, which is a vaccine maker, hasn't been approved yet by the European Medicines Agency. We are expecting that potentially next month. That stock is higher by 2.7%. And then along the lines of travel reopening, optimism perhaps about U.S. citizens being able to travel to the EU. We have a number of U.S. travel companies moving to the upside in early hours. Norwegian and Carnival Cruise Lines each up 1.4%. United Airlines by about 1.2%, Francine.
Yeah, coming up, we'll talk, of course, about all these market moves. We'll look at industries and earnings out with Freddie Late, Latitude Investment Chief Executive Officer and Chief Investment Officer. And of course, throughout the day, the Bloomberg Green Summit focusing on climate goals. It starts a little bit later on, and we'll hear from the former Vice President Al Gore, Dow Chairman and Chief Executive Jim Fitterling, and BlackRock Chairman and Chief Executive Larry Fink. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacroix in London and Kaylee Lines in New York. Now, both of you, Francine and Kaylee, have talked about the deluge of tech earnings that we're going to get. And I was just looking at a chart that Hillary put together for us that shows us just how much we expect earnings to increase. The revisions have shot up, whether you're looking at European earnings, which are here in white, or U.S. earnings, which are here in kind of a baby blue. Actually, for those of you on radio, you're not missing a heck of a lot with this chart, except for the direction. As Tom Keene would say, it goes up and to the right, Fran. So we're expecting real increases. But the interesting question I would have for Freddie, who I know you're about to bring in, is why place such big bets on the U.S. if Europe is expected to bounce back even stronger?
Yeah, so this is the million-dollar question. So let's get straight to the man himself, Matt. Freddie Late, Chief Investment Officer and Founder at Latitude Investments. Freddie, I guess if you look at the pros and cons, as Matt beautifully laid out for the European Union, is that we still don't have the disbursement of the recovery fund. But actually, if suddenly the economies reopen to tourism, then that could be a big boost getting into the summer for these economies. What does it mean for your appetite for European assets?
Good morning, guys. I think it's definitely true, and I would broaden out the sort of idea as well that U.S. tech earnings are going to do very well. They've continued to grow very strongly through the pandemic, and many have been pandemic winners. But there is now an increasing likelihood that we will see recovery and potentially meaningful multi-year growth in other regions and sectors around the world, and Europe being one of them. It's obviously slightly more cyclical. The rollout has been a little bit lagging, so the last few months we're talking about has been a bit slower than the US, but their time will come. The vaccine rollout's now speeding up again. The European Recovery Fund, as you say, is in train. And so I think, looking at choice European assets at this point for the next few years is a very wise thing to do. We have certainly increased our European exposure over the last 6 months reasonably meaningfully. And I think that would broaden out to other sectors as well. I think, just looking at the sort of hiding place of US technology, as strong as they are, being too overweight that sector at this point in the cycle, given the valuation risks and the opportunities available elsewhere, I think it's definitely time to broadening your horizons.
Freddie, you talk about the paradox of financial repression. What does it mean for asset classes that you like or don't?
It means that the central banks are going to do everything they can to make inflation higher than asset price returns. And the most principal one of those is bonds. And I think bonds, straight government bonds, are very, very hard to argue for in a long-term portfolio at this stage. There can be tactical rallies, but I think they're very, very hard. That's non-trivial, it's quite consensual, that. The other view is on stocks themselves. Stock markets have had a huge decade and are pricing in very strong earnings growth, which Matt alluded to earlier, but also starting at a very high multiple. Whichever way you look at it, we're starting at a very high multiple. Our view is that index level markets, will deliver 0 to 5% a year for the next 5 to 10 years, not the 9 or 10% we've been used to through the very long term. And I think picking those correct stocks within it will matter hugely in order to defend even equity portfolios against inflation.
Freddie, I look at your tech holdings, and most of them have hugely outperformed. Alphabet is a big holding for you. It's trounced the S&P 500. I look at it over the last 5 years just to make it uniform. Sony has also destroyed the benchmark over the last 5 years. Texas Instruments, though, one of your biggest holdings, is just at par over the past 5 years with the tech companies that it's in, the Infotech Index, if you will. Do you think it's going to be an outperformer?
Yeah, very, very astute of you, Matt. So we've owned Sony and Google for the last 5 years, indeed a bit longer in each case. But we only bought Texas last year. So we invested when it had that big sell-off, like most stocks around the world did, with the view that it's a very diversified player in the semiconductors industry. It's the largest analog player globally. Very, very high quality management team with a great focus on growing free cash flow. And we thought it's a slightly low risk way of playing the semiconductor space, but it's a very positive way to play what little global growth there is going to be in a guaranteed structural way over the next 5 years. So we believe we bought it for a song last year. It's been outperforming since we bought it. And we do believe it can outperform the growth rate of the S&P over the next 5 years reasonably substantially, yeah.
Of your top 10 holdings, I noticed that other than Sony, the only non-U.S. stocks are Diageo and Heineken. I'm sure we all intend to do what we can to help a revenue recovery.
Yeah, no, we'll appreciate that, Matt. I think they're both two stocks that are very, very high quality long-term earnings power, very, very high quality structural trends at play, but are being treated like cyclical stocks at the moment because of the negative impact from coronavirus last year. And we believe they will prove to be highly defensive over the next 10 to 20 years, continue to compound up their earnings and cash flow growth as they have in the past, highly inflation protected. And again, we actually added both of those stocks. They're two of the European names we added last year. So I think they're mistakenly being treated as cyclicals, which will continue for as long as the world's in lockdown around in various areas. But at some point in the next couple of years, they will be highly defendable businesses again.
Freddie, while we're just kind of picking apart your holdings here, I noticed you have a lot of consumer goods companies as well, including Coca-Cola, which just last week was warning about inflationary pressures. What is the case for owning some of these names as we see those margin pressures coming into play?
Yeah, so in the one hand, they were warning about inflationary pressures, and with the other, they were talking about these price rises that they're going to put through, and on the initial basis, have seen very little pushback against. And I think this is one of the biggest things we're going to have to decide upon for the next 5 or 10 years. We're going to see some level of inflation. We can debate whether it's a transitory, as Jay Powell wants it to be, or something more structural. You need to own businesses who are confident and have the ability and the willingness to raise prices to maintain or possibly even grow those margins. And we have high faith in that scenario at Coca-Cola, which is also wrapped up in a huge strategic goal, which they're nearly reaching, of outsourcing most of their capital-intensive bottling to other businesses. So we think it looks very, very attractive on a multi-year view, and from that angle on margins, very particularly around pricing power.
Freddie, what's in a bubble? Is there something that's just being overbought right now?
We're kind of in the everything bubble. So many things have gone up extraordinarily, and I do believe that stock markets as a whole are richly valued. And no matter which way you look at history, the current starting valuation implies a lower than average forward-looking return, anything between 0 to 5% per year. That includes dividends. Bonds are, in my view, quite clearly in a bubble and very hard to invest in. Commodities are probably not. Commodities over the last 5 or 10 years post the financial crisis have seen quite a lot of supply side discipline, in particular oil and gas. At present, you're seeing a lot of discipline around free cash free investment levels in shale oil and various other oil producing areas of the country, of the world. And mining stocks got there kind of 5 years ahead. So I think commodity prices are likely to carry on performing strongly, even if the economy sort of falters at some point. So I think they're probably not. But I think it's a slightly everything bubble. You look at real assets, houses, wine, watches, SPACs, cryptocurrencies. There are always going to be some great ones within there. But as a whole group, I think you really need to be careful you're not overpaying for assets at this point, because I think there is a real bubble mentality behind the thing.
Great. Freddie, thanks so much. Freddie Late, their Chief Investment Officer and founder at Latitude Investments. Now, coming up on the Biden administration's first 100 days and foreign policy, Richard Haass, Council on Foreign Relations President. That's at 6:30 a.m. in New York, 11:30 a.m. in London. And this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now let's get straight to the Bloomberg First Word News. And Republicans may be willing to back as much as $900 billion in infrastructure. That's one of our top stories, and of course, one that we'll be watching out for in terms of taxes and the implications of that. Now, the other story we're watching is what's going on in the markets. The markets really poised for a bit of change in terms of earnings. We had a good conversation with Freddie Late. That's one of the things that we'll keep an eye on for the rest of the week. Europe also opens its doors. That's one of the things that has really everyone talking about that. So we understand that American tourists reportedly will be welcome in the EU this summer as long as they've been fully vaccinated. Now, that comes from a New York Times story. Ursula von der Leyen speaking to reporters on that. Then finally, high hopes. Investors are counting on big things from Tesla when the electric car maker reports earnings after the bell. Is just one of the big tech companies that we'll hear from this week. I know we've also been watching the Oscars. That is one thing that none of us actually. So I know we were talking about it before coming on air, Kaylee and Matt. So I don't think any of us have seen Nomadland. And actually, what's holding me back, but I will watch it this week, it's just a hard film. It's very emotionally charged, and a lot of people have been telling us, look, in these kind of COVID times, maybe you want something a little bit more lighthearted, or certainly something that lifts the mood.
It's not really a Friday night. It's not really a pizza and popcorn movie. At least it doesn't look like it. I considered it this Friday, and it looks like very high quality. I'm sure it's great. I love the actress, but I needed something a little bit more like The Rock, you know?
I do love The Rock. Will he run for president? That is a very good question. But I haven't seen Nomadland either, but I hadn't seen pretty much any of the films that were nominated for Oscars this time around. I know a number of them were very critically acclaimed, but I guess in this kind of streaming era, when you're not actually going to a movie theater to watch the movie, it makes me feel like I have time. I can wait and I can see it and stream it whenever I want, Francine.
Yeah, and the other big story, of course, that everyone's talking about is Ursula von der Leyen speaking to the New York Times reporter, saying that actually the EU will be open for business. If you're fully vaccinated and you're American, then the EU will open their doors. Matt and I had a backwards and forwards, of course, on whether, it's up to the individual countries to decide whether that's true or not and whether they're open for tourists. And then we haven't heard the U.S. side, with the U.S. saying whether people are allowed to go or not and travel.
Yeah, and that's the key for me, right? Because I want to go home. But if I don't get a vaccine here, I don't know if that's going to be possible. Maybe I'll go home to get a vaccine. Maybe that'll make it possible. Maybe the U.S. will save me.
Maybe. All right. We'll have plenty more, of course, on some of these earnings as well. Tesla, what to look out for. That's what we'll be discussing with Richard Windsor, Radio Free Mobile founder. One of the big things that we're looking for, of course, is the electric vehicle car maker, how it deals with some of these new entrants. This is Bloomberg. This is Bloomberg Surveillance, the early edition of Francine Lacqua in London, Matt Miller in Berlin, and Katie Lyons in New York. Matt, a lot of earnings, and that's definitely what the market is focusing on.
Yeah, absolutely. Looking forward to Tesla earnings, for example. The deliveries in the first quarter were a positive surprise. So the question is, can they deliver on the financial side as well? And what does that say then, for the rest of the market? Because the entire industry is trying to catch up to Tesla in terms of valuations. They may be able to overtake it very quickly in terms of production.
Yeah, and then we have a lot of bank earnings as well, certainly here in Europe this week with HSBC and also UBS. Kaylee, how is this all playing out in the markets?
Well, the market also is waiting for a Federal Reserve decision this week, GDP data. There are so many catalysts, we just haven't gotten them yet. So the moves right now are very fractional on both sides of the Atlantic. The stock 600 in Europe is higher, but only by about 0.1%. You are getting a little bit of outperformance from the travel and leisure sector after Ursula von der Leyen, the EU Commission president, said, in fact, U.S. tourists like myself may be able to actually go to Europe this summer for travel. Here in the U.S., of course, we're not at record highs. We did, though, see a pretty healthy rally on Friday. We're not seeing a follow through from that today, though. Futures down about 3 points on S&P E-minis as we see the 10-year yield climbing 2 basis points. We're sitting just shy of 1.58%. And Matt, I know you aren't all too impressed with the Bitcoin rally this morning, but I still think it is worth noting Bitcoin back above $52,000. And that move in Bitcoin is aiding some cryptocurrencies hide stocks in pre-market trading. You have Marathon Digital and Coinbase each higher by more than 5%. And then another equity that is moving in tandem with another asset class is Freeport-McMoRan. It, of course, is a miner, and with copper around its highest since 2011, that stock is higher by 2.3%. in pre-market trading. And Matt, Francine, you were just talking about Tesla earnings coming up after the bell. Not a lot of movement in pre-market trading right now. It's essentially flat, but options pricing is saying that the stock could swing by as much as 6.2% in either direction after those results. So we all will be keeping an eye on that, Matt.
Yep. Yeah, that's fascinating that the pre-market isn't really moving Tesla so much. I guess people are biding their time, waiting for those earnings, but you'd expect punters to want to take a bet before the report comes out. I have a chart that I kind of teased at the top of the show. I was talking about growth forecasts for the U.S. economy. This shows 2021, 2022, and 2023 growth forecasts for those of you listening on London DAB digital radio. I'll just tell you that it all adds up, 6.25%, 4%, 2.5%, to about 13% by the end of the 3-year period. So if these forecasts are spot on, you see the U.S. economy growing double digits over the next 3 years. That's pretty strong, and I think the important part is, Francine, whether or not the vaccine rollout works, whether or not the variants are able to be beaten by the vaccine, whether or not people get out, gain confidence back, and really start to invest, spend, buy, but also build.
Yeah, and this, of course, are Western countries, and then you look at India and actually the horrific situation there, which we're also expecting not only to hurt GDP over there, but also globally the price of oil. Now, as we've mentioned, Tesla kicking off a busy earnings week today. The electric car maker has already reported strong deliveries for the first 3 months of the year, raising expectations that results can jolt shares. Well, joining us now is Richard Windsor, founder at Radio Free Mobile. Richard, thank you so much for joining us. When you look at market share and actually the EV market being ever crowded, can Tesla really hang on to that market share?
I think for the moment, the answer to that question is yes. I think the numbers this quarter will be good. And I think the short-term outlook, certainly perhaps for the rest of this year, is also very good. And particularly if you look at what's happening in China, Tesla has done amazingly well in China, given there are now 400 competitors all trying to steal the EV crown away from Tesla in China. So I think in the short term, things look good. But I think what you will find over the next couple of years, that technological edge that Tesla has may start to close.
When you look at Elon Musk and his love for erratic tweeting, of memes especially, is he a liability at some point for the company?
That's a great question. He could at the same time be his greatest asset and its greatest liability. He has been censored by the SEC a couple of times, but to be fair to him, he pretty much single-handedly has kick-started the whole EV revolution, which is now, every OEM in the world is now very much pointing in this direction. So you've got to tip your hat to him at least for that.
Yeah, well, and he has $186 billion. If you keep score that way, he's been doing pretty well. He's also, it's not just the EV revolution, right? He's also kickstarted private space, the private space industry. He's done a lot for solar. The software play is also a huge part of that. What is the main driver of Tesla, of the Tesla market cap? Surely it's not just making cars.
No, it isn't. But the other problem is it isn't fundamentals either. And that is where I think things will eventually become unstuck. The issue basically is very simple, is there's a narrative out there, which is that the entire automotive industry is going to electrical vehicles over, say, the next 15 years. And Tesla is currently at the forefront of that. And if you want to talk fundamentals, in order to justify those fundamentals of the share price today, Tesla needs to get 40% global market share, which, quite frankly, I think is pretty unlikely even in the most optimistic scenarios.
But I wonder what Tesla can change, or rather, what can Elon Musk change? His whole career, he's made money by doing things in a way that no one else was doing them, whether you're talking about banking, whether you're talking about cars, whether you're talking about space travel. And now Tesla looks to me, not just the design looks kind of old, but it doesn't seem like the cars are doing anything new. Is there something on the horizon that we're maybe not seeing, Richard?
Well, there's a couple of things. I would say certainly if you look at the software experience in Tesla today, it is still vastly superior to anything else out there. But again, people are catching up. If you look at its range per kilogram of battery, if you like, they're still the best in the industry, but people are catching up. Now, what many of the bulls in Tesla are hanging their hats on is the whole robo-taxi strategy, which is basically where Teslas are used basically to provide a robo-taxi fleet, which could generate, a very substantial amount of revenue and profit, if you believe Tesla's forecast. Now, unfortunately, my personal opinion is there is a fundamental flaw in their robo-taxi strategy, which is the pricing is much too high. There's going to be massive competition in this space, and the price per mile is going to be much, much lower than they say it is.
Richard, of course, Tesla is reporting this week. It is one of the mega caps, but we have a number of them coming out over the next couple of days. And we have a lot of conversation about tech stocks in particular being priced for perfection. How much more broadly speaking can an upside surprise on earnings be an upside catalyst for some of these big tech names?
I think very little. And, this is a trend we've actually been seeing since pretty much the end of Q2, beginning of Q3 last year. Amazon is a great example. Amazon's had a very high valuation for many years and has produced stellar results, certainly over the last 6 months, but the share price has gone sideways. You can say similar things about Facebook and Apple and so on and so forth. What I think is going on here is you get a pause in the share price while the fundamentals catch up with the valuation. And once they've caught up with the valuation, then you might start to see these companies break out of that range and start to hit, further highs. But the problem is they ran so hard that the valuations are now so high, this is going to take a little bit of time.
Yeah, and we have a lot of conversation as well about the previous COVID pandemic winners becoming losers as economies reopen. What kind of business is going to be resilient when it comes to growth?
That's a great question, and in fact, I actually think what is going to happen is as things start to reopen, there is going to be a substantial re-rating or removal of capital from growth back towards the gross, the greatly neglected and very cheap value end of the market. Things like travel and leisure and entertainment and venues, all the kind of things in that area. I think what this is really telling you is, with these kind of big caps going completely sideways, what's really happened is it's become a stock picker's market. There's a large number of options to choose from in the electrical vehicle arena. Some of them good, some of them not so good, some of them very expensive, some of them very cheap. It's just a question of getting out there, doing the research, and finding the stories that actually make sense, both from the narrative and from the fundamental point of view.
Thank you so much. Richard Windsor, their founder at Radio Free Mobile, talking Tesla and tech. Now, coming up, India faces a virus crisis as the U.S. and Europe considers opening travel. We'll speak with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. He's coming up next, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Salesforce Service Cloud CEO Clara Shih. This is Bloomberg.
I think that's going to be something that is up for active consideration, George, certainly. I mean, I don't want to be speaking for policy right now with you, but I mean, that's something that certainly is going to be actively considered.
Well, that was President Biden's chief medical advisor, Anthony Fauci, telling ABC that the U.S. will actively consider sending India unused doses of the AstraZeneca vaccine. Well, joining us now is Joshua Sharfstein. He is Johns Hopkins Bloomberg School of Public Health Vice Dean. Dr. Sharfstein, as always, thank you so much for joining us. How should we look at the latest findings in an interview with the New York Times, the commission president saying that actually we could also see travel between the U.S. and Europe just at a time where India is getting so bad?
Well, it just shows the enormous disparity in the world right now. Places that do not have access to vaccine in sufficient quantities are facing these variants that are so severe that, they're having the worst pandemic yet right now. And yet at the same time, places that do have access to vaccine are starting to return a little bit to normal and are thinking about things like European vacations.
But if we don't get a handle on COVID-19, and this, of course, from a humanitarian point of view, is something that we absolutely have to do, but also from a contagion point of view, if we don't get a handle on COVID in India and other emerging markets, can they reinfect the West?
Well, I think, first of all, it's just a human rights and human health catastrophe to have this many cases and deaths, and the potential of suffering in India is really just staggering. If you think about situation where they don't have oxygen, where the hospitals are filled. I mean, it is just really compelling the world to jump in and help, and to think about the importance of making sure in the short term that they get the resources they need, and in the very near term that there's enough vaccine. And absolutely, you're right, it does put the world at risk.
Yeah, I mean, it's definitely a tragic situation, but I know Fran's point, or I surmise that she's really talking about the variations that we could see. Is that the real threat here? We get everything dealt with in the U.S., maybe in the Western world, and then the virus mutates in a way that overcomes even the inoculations that we've received.
I mean, you're correct. I mean, this is humanity against the virus, and if the virus, finds a way in India or another country to infect people or to evade the vaccine, then everybody on the planet is at risk from that. So, we really do have many good reasons to fight coronavirus around the world, even if it's no longer the immediate threat it was in our own, in our own street.
If we focus back in, Doctor, on the U.S., the vaccination rollout is obviously going incredibly well. We have now a majority of adults vaccinated with at least the first shot. The New York Times had a story yesterday saying more than 5 million people, nearly 8% of those who got a first shot, aren't going back for a second shot. Is this a growing concern?
I don't think it's a growing concern per se, but it is part of the messaging in a lot of places to make sure to get the second shot. And, you know, when I'm volunteering with the health department, I'm always talking to people about the importance of the second shot. And, you know, just because people don't get it right when they were originally scheduled doesn't mean that they won't get it. And I see people who sort of straggle in a few weeks later. So I think it's, you know, part of the overall vaccine challenge is to help people get that second shot and really be as protected as they can be.
But Dr. Sharfstein, there is a growing sense that demand for vaccinations, even the first shot, is waning. How concerning is that?
Well, I don't think it's so much demand is waning. I think we always knew that the excess demand that was there, the people who were really, you know, banging on the pharmacy door, that those people will get vaccinated. And that's sort of what's happening right now. And so what you're now left with are other people who, you know, are ready to be vaccinated, some of them, but not, you know, seeking out every dose right away. And people who really need to hear more or to have more convenient access. This was the shift that was always going to happen. Came a little sooner because we had so many vaccines faster than we had anticipated. But, you know, what this is going to require is not, you know, not just a rush of vaccines to people, but patience and outreach, listening, and understanding so that more and more people get vaccinated. As a specific example, I know that the city of Baltimore here is putting together teams for outreach to group homes of 5 or 10 people. I mean, it's going to take a lot of that to really get the numbers up.
Dr. Sharfstein, can I go back to what's happening in India? Has the West let down a lot of emerging and developing economies because of a lack of vaccine, because they've bought too many at higher prices? Or is it a, you know, a case surgent, which is really quite incredible in terms of the number of people infected because of a lack of a national lockdown, or is it a new variant?
Well, I mean, there's also the all of the above option there with everything contributing. Obviously, the countries in the West were able to finance the development of vaccines. And so, you know, particularly the mRNA vaccines. And at the outset, there were efforts to really try to stand up a huge global vaccine capacity, but countries really were not fully committed to them, including the United States, which were actively resisted under the Trump administration. So we're starting a little bit behind now to catch up, but it can be done if there's really a serious commitment to do that.
Thank you so much for your insight. Joshua Sharfstein there of Johns Hopkins. And the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Now, throughout the day, we also have the Bloomberg Green Summit focusing on climate goals. We'll hear from the former Vice President Al Gore, Ariel Investments Co-Chief Executive President Melody Hobson, and the BlackRock Chair and Chief Executive Larry Fink. I know it starts at 9 o'clock in New York time. That's 2 p.m. in London. You can still sign up. We'll also have plenty more, of course, from our conversation with the former Vice President Al Gore on what's needed in the coming years to tackle climate change. This is Bloomberg.
We're now in the early stages of a sustainability revolution powered in part by machine learning and artificial intelligence and the Internet of Things and the biotech revolution that has a revolution that has the magnitude of the Industrial Revolution with the speed of the digital revolution. And many are saying it is the biggest business and investment opportunity in all of history. We've also seen the creation of millions of new jobs in renewable energy particularly, but in other sectors of this sustainability revolution as well. Now, I think the arrival of Joe Biden in the White House with an extremely impressive whole-of-government approach to solving the crisis, and his skill in rallying the world community and all the new pledges leaders have made. Also in the investment world, excuse me for going on, but I want to get this point in. $37 trillion worth of assets under management is now managed by the Net Zero Asset Managers Alliance, committed to making those entire portfolios net zero by mid-century. So these and other developments have coincided to really push us forward.
Well, that was part of our conversation with the former Vice President Al Gore. He'll be speaking at this week's Bloomberg Green Summit. It starts this afternoon. You still have time to register. Afternoon here in London time, early morning actually in New York. And it's amazing. 15 years ago is when The Inconvenient Truth came out, and we started by talking about how many years we wasted. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us now. Tom, Twitter is on fire. It's absolutely obsessed with the change name of Aberdeen. This is like the death of all good grammar, but it's got people talking about the asset manager.
When I first saw it, I thought it was a joke. And, you know, Francine, as you know, in the Bloomberg world, we're always aware of rogue emails that can trip us up and embarrass us. And I actually thought it was possibly a rogue email. It's not. I guess it's for real. They're doing a name change at Aberdeen. Team Surveillance welcomes Aberdeen. I guess our good friend Martin Gilbert's going, what? And this stuff happens, and then it goes away. There's some point where somebody will come to their senses, and it will go.
Yeah, it's interesting, Tom. First of all, I love Team Surveillance, welcomes Aberdeen. Look, they're trying to attract a younger base, right? By basically speaking as a lot of
come on, it's consultants run wild. That's all it is. And, you know, it's sort of like the movie Ishtar, you know, the Academy Awards, and we all, the iconic failure of Ishtar. You just wonder how it gets done. How does it get through? The issue is not this good idea of taking out the vowels on any given name. The idea is how did it get through 4 layers of management? That's what I find. Just absolutely
and how much
stunning.
did they pay for the name change? What else, Tom, are you looking at?
Earnings, got to be earnings. I think it's, you know, earnings, I really don't care about earnings. Earnings are earnings, and we try to go more long-term on surveillance. But, boy, I'll tell you, big technology reports today. Throw up the chart here real quickly. I never do busy charts, but this week deserves a busy chart. Amazon, Apple up top, Microsoft and Google coming on, outperforming the S&P 500 off of Valentine's Day, which next year is VLNTNDY.
I like your spaghetti chart, Tom. You've changed. I like that.
Once a year. You know, that's it. Once a year. That's it.
Yeah, I'm going to take out Tom.
Hillary put me in the chart timeout chair. Yeah.
Of Bloomberg Surveillance. Thank you so much. I'm looking forward to the program. Now, this is what else we're watching. So I know we're watching Tesla, but Matt is out. Actually, are you outraged by the name change, Matt?
I love it. I have to say, I'll take the other side on this one. And I think the disemvoweling trend has gone on for so long that it's not going to go away. It's going to be like using plural pronouns for singular antecedents, ignoring split infinitives. It's just the new way the kids talk, and I like it.
All right. Well, for Kaylee and I, we're sticking to the vowels. Old school. This is Bloomberg.